Hi, this is Nicholas Vardy, editor of the Oxford Swing Trader, and welcome to the latest edition of my video series, Swing Trading NixPicks. In this series of videos, I offer viewers like you a swing trading recommendation as a taster for the kind of actual recommendations I offer to my regular Oxford Swing Trader subscribers. And if you never want to miss one of my swing trading videos, make sure you subscribe to this channel. That way you will get instant notification when I post a new video. And if you're new to swing trading, check out my Swing Trading Explained video to learn how it works. There's a link to that video in the description below. Now let's get into this week's video where I'll be reviewing an actual real live recent swing trade recommendation. On Wednesday, December 9th, I recommended a familiar name to most of us, H&R Block. Headquartered in Kansas City, Missouri, H&R Block, ticker symbol HRB, has been providing income tax return preparation services to the general public going back all the way to 1955. On December 8th, the company announced its earnings for the quarter ending September 30th. H&R Block reported a loss per share of $1.09 that came in worse than consensus estimates of a loss of 93 cents. There was, however, good news on the revenue side. Revenues of $177 million increased 9.8% a year over year, and that handily beat consensus estimates by 7.5%. However, investors weren't impressed and shares of the company promptly tumbled 7.9%. You see the sharp drop in the long red candle on the far right of the chart. Such a sharp drop is a classic case of investors throwing out the baby with the bathwater. After all, H&R Block is an established leader in its field, and its management is working hard to serve more customers by better leveraging existing assets through its new Blocks Horizon strategy. In short, I knew that H&R Block wasn't going anywhere. So let's take a look at the swing trade parameters. The closing price of the stock had been $16.30 at the time of the recommendation. The trade setup was as follows. The swing trader algorithms fired on the channel system, the overreaction system, and the stock was oversold on the RSI and exhibited a 1SD pattern. The stop loss was $15, or about 8%. The target for the stock was $19.25, or about an 18% gain. So the stock recommendation was to buy H&R Block, ticker symbol HRB, at market and to set your stop at $15. I also recommended that speculators might want to look at the April 17th $17 calls. So now let's take a look at what actually happened with the stock. Well, it took about 6 weeks for the trade to unfold. Then the stock jumped 9.18% on January 26th on news the company had just launched an ad campaign which would showcase how Block's expert care is easily available to all customers from home, in offices, or anywhere else. The April 16th $17 calls also soared a whopping 76% just that day. As always, after such a big jump in the stock price, the options became overvalued, making it a good time to sell. So I recommended that subscribers book both stock and option gains in HRB right away for a gain of 10.8% based on our official entry price of $16.65. I also recommended that subscribers sell their April 16th $17 calls to lock in a 51.7% gain based on an entry price of $1.45. As it turned out, H&R Block stock continued to rally the day of the recommendation, and our official gain in the stock was 12.91%, and the gains in the options actually grew to 65.52%. This real-world trade highlights three things. First, I based my recommendation on the prior day's closing price, so you may get a different fill price than the one in the alert. This price can be both better or worse than what you see in the alert. In HRB's case, subscribers logged better gains than they expected. Second, you need to act fast on your recommendations to lock in your gains. Both stock and option prices can move quickly. I always try to send out alerts recommending you book gains about 10 minutes before the market open. Third, I will always recommend that you book profits after a big jump in the stock price. Based on the way options are priced, they tend to get overvalued after just such a big jump. So there you have it, a real live swing trading recommendation from Oxford Swing Trader. Now, just to be clear, I can't guarantee that all my swing trade recommendations will be winners like this one. But when I do get it right, you could see huge double-digit option gains within just a few days. And remember, Oxford Swing Trader recommends an average of 2 swing trades like this each week. So you have plenty of opportunities, about 100 a year in fact, to generate quick gains using swing trading strategies. Again, be sure to subscribe to this channel so you don't miss my next edition of Swing Trading NixPicks. That way you'll get instant notifications when I post a new recommendation. And if you want even more trades like these, then I urge you to check out the conversation I had with Russell B., a happy subscriber to Oxford Swing Trader, at the link in the description below. Or you can call our sales team at 888-570-9830 to learn more. Stay tuned for my next edition of Swing Trading Next Picks 2 weeks from today. Thanks for watching.